Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today's the 4th of September 2019, so welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also before we jump in to the charts, quick mentioning of our JFD YouTube channel here to which you can always subscribe to, and of course our JFD Bank website, but specifically our JFD research page, which you can always check out on a daily basis in order to kind of have a look at different analysis that we do every day. So yep, I believe you can find something useful here. Right. But for now, let's jump into the charts. Now, the first one I want to touch on here is the S&P 500. Now, I talked about this one yesterday, and basically what I was talking about here, I was telling you guys to keep a close eye on some of these key areas of support and resistance. Now, as you can see, the index traveled lower yesterday. It closed in the negative territory, but managed to hold on to this 2,894 zone. This is the level that I've mentioned yesterday in my Traders Tea Time. And basically what I was saying, if we get a drop below this, then yep, this is where we will start considering maybe slightly lower areas inside this little range that we've got here on the S&P 500. So we could aim even for the lower side of the range near the 2,822. But as you can see, the index never well, it did have a brief overshoot here, but kind of the buyers were quick to push this one back up here and keep it up above the 2,894 level, and of course this 200 EMA on the 4-hour chart. So for now, we're going to remain neutral. We need to see a clear break, or ideally even actually a daily close either above this 2,944 zone or below this 2,894. So for now, we're just keeping an eye on it. Looking at the cash index right now, we can see that it is currently pushing back here to the upside. So in a way, we could, or should I say, probably we will see a nice opening gap here to the upside, and it's the index. The cash index is currently near the 2,931 zone, so not far from this barrier here, but again, we'll wait for that confirmation break of the 2,944 before examining higher levels. Jumping into another interesting instrument, which I talked about this morning, and that's WTI oil. Now, what I was talking about this morning was that basically, in order to consider a possible move higher here, after we got this nice rebound from the 52.95 level, in order to consider a slightly higher levels, we need to see a push above the 55 zone, and this is what happened today. So we're having this nice push. The commodity is currently near its 200 EMA. In a way, if it stays here, then yep, there is a possibility of seeing this one pushing further north here. But again, the upside could be slightly limited due to this downside resistance line taken from the high of the 13th of August. So initially, we will target that. That area, and then we'll take it from there. After that, we'll see what he wants to do with this downside line. So for now, like I said, we are somewhat a little bit more bullish than bearish on this one. Don't forget, we do have some data coming out. We do have the API weekly crude oil stock numbers. So this is where it could kind of affect the WTI here, the WTI price. So be very careful here. Let's see how this is going to play out. But again, like I said, I'll repeat myself. For now, it seems to be quite positive, at least from the very short term perspective, but we will initially aim only for this downside resistance line. If it gets broken, then that's wonderful. We'll continue aiming towards slightly higher levels, but for now this is our target. For now it's this downside resistance line. USDCAD also, I talked about this this morning, and to be honest, I kept talking about this one from the start of this week, and basically after yesterday's kind of push higher here, after this strong false breakout that we had yesterday, the pair traveled back down, and now it's testing this level here that I've talked about as well, the 1.3310. Now, in order to consider further declines here, at least towards slightly lower areas, we need to see a drop below this level, below this 1.3310, and only then we'll consider a possible slide towards this tentative upside line. But to be honest, if it's just seen as a temporary obstacle here, a further slide could even test the 200 EMA, or on the 4-hour chart here, or the lower side of this previous range. So for now we're gonna just kind of concentrate on this 1.3310 zone. If we get a break, that's good news for the bears, and we could see this one sliding a little bit further down, initially maybe targeting the 1.3280. And then of course the next target could be around the 200 EMA on the 4-hour chart, but also, like I said, keep your eyes on the 1.3248 zone, which also could play out nicely. But again, for now we need to see that confirmation drop below the 1.3310 level first. If suddenly this reverses and pushes back above the 1.3345, maybe it could give another chance for the bulls here to step in and push this one higher. We will target the 1.3387 zone, but if that is just seen as a temporary obstacle, this is where a nice good break above this would confirm a forthcoming higher high, and we could see this one traveling all the way towards the 1.3433 zone. But again, let's not over speculate on this one too much. Don't get me wrong, in about 35 minutes we do get the Bank of Canada interest rate decision, so keep an eye on this pair. USDJPY is something that we haven't looked at for quite a while now, and this, to be honest, the reason why we haven't looked at this one, because it's kind of in limbo and it's just not moving anywhere. For now, you can see that this is where the kind of the price action is maintained in. That's roughly between the 105.55 on the downside and the 106.68 on the upside. So this level here, the 106.68, also coincides with the 200 EMA here on the 4-hour chart. So in a way, this is where we're going to be waiting for. We'll wait for a clear break above this level before kind of, let's say, examining slightly higher levels. We're not going to drag this one too much to the upside, and let me just adjust this very quickly. So if we do get a push above the 106.68, the next target for us is around this 107 zone, or slightly above that, the 107.18 also could be seen as a potential good area of resistance. But again, for now, we can't really talk about the upside until we see this good break above the 106.68, so keep your eyes on this one. In terms of the downside, again, with the downside, it's also a little bit difficult, because if we see a drop below the 105.54-55 zone here, then yes, we will aim for these lower areas, like for example, the area around the 105 zone, maybe somewhat of a psychological zone. But another potential area could be seen here near the 104.40, which kind of marks the low of the 25th of August. So also good potential target here, but again, we cannot really talk about the downside yet, or at least downside in the short run, until we see this good break here below the 105.55 zone. So keep your eyes on this one. AUDNZD is something that I talked about this morning. Basically, what I've mentioned this morning was that the pair is continues to trade within this rising wedge formation, somewhat, maybe a bit, not a very ideal one, but like I said, that's why I'm calling it somewhat of a rising wedge. But again, you can see that today, this morning, it did try to move higher, got held just slightly below the R1, and then kind of sold off, but still got held by the pivot point. So here, for now, again, it's a very tricky one. What you could do here is just continue observing this one. Don't try to maybe predict anything here inside, but probably what's gonna be interesting more here will be the fact that if this is gonna work out according to textbooks, and we see a drop below the lower side here of this rising wedge, and maybe a drop below the let's say one of these levels here, the 1.0649 or the 1.0629, this is where it could become a little bit more interesting, because we could see this one's maybe sliding back down here. Initially we will target the 200 EMA, and then we'll take it from there, see what he wants to do after, because as you can see previously here, the 200 EMA on the 4-hour chart kind of acted as a nice area of support. I mean, it did have its overshoots here, and maybe that didn't quite reach it, but it's kind of still acting as a nice magnet here for this pair. So that's why, guys, be very careful with this one, but again, we'll consider the downside only if we see a break of this lower side of the rising wedge and a drop below the 1.0649. This is when we will start considering lower areas. In terms of the upside, well, I mean, this level here, these two levels, the 1.0715 and the 1.0726, are kind of both seen as nice potential resistance zones. As you can see previously, those were so the 1.0715 was the high of the 18th of April, and the 1.0726 is the high of the 8th of May. So yep, of course, this year. So in a way, we're not far from there, and also the last one here, the 1.0726, almost kind of coincides here with the upper side of the rising wedge. So we could in a way see a push higher here, but the only thing is that we will consider a possible move higher only if we see a clearance of these recent highs here, and specifically this one right here. I do understand it's very close and it's very tight, but to be honest, it's very difficult with the upside here, because we're already quite extended here to the upside on the shorter time frame, of course. So in a way, if we get a nice push above the 1.0709, we could consider these higher levels, but again, it's very close. It's very kind of, there's not a lot of pips here, so that's why be very careful. And this is why I'm saying that actually the downside is kind of, this is something what could be a little bit more interesting. But again, before kind of looking at the downside, we need to see some confirmation breaks before kind of examining those lower areas. Another interesting pair, EURUSD. I talked about this one this morning as well, and basically we were kind of balancing around this 1.0975 zone. We were just maybe slightly above it, and this is what I was saying, that if we get a nice push away from that 1.0975 zone to the upside, then the next target for us is around the 1.1024 zone, approximately there. And this is what we got. We had a perfect hit, and now you can see that this is the pair is slightly correcting back to the downside. Now, again, with this one, yes, we could see a continuation move higher, especially if we see a push back above the 1.1024. And by the way, this was basically the low. Near the low of the 1st of August. So good area, good potential level here to watch. So if we do get a push above this, we will start looking at maybe slightly higher levels like the 1.1050, or even going back towards the area around the 1.11 zone, something around here maybe. Let me just quickly adjust this. There we go. So basically it's around here. So and of course, slightly above that, we do still have this downside resistance line. So basically, long story short here, guys, any kind of move higher here up until this downside line will be seen as a correction. But if this line gets broken, then we could see this change in the short-term trend, and we could see this one pushing. We could see euro dollar pushing further up here. But again, until then, it's really difficult to talk about the upside. Don't get me wrong. I mean, looking at this picture right now, yes, we could see a push further up here. But be very careful. Like I said, at any point here this could reverse and push back to the downside, because like I said, we are still within a downtrend, and it's like I said, it's a little bit difficult to talk about the upside unless you're trying to scalp it and trying to capture just very small swings here. So again, for now, just be very careful here. In terms of the downside, if this suddenly starts falling below the 1.0975 level, now this is where it could become, well, we will start getting interested here, or should I say the bears will start getting interested here. We'll start looking at the recent lows, of course, near the 1.0924 zone, but a break below the 1.0924, a break of this level would confirm a forthcoming lower low, and this is where it could turn out to be ugly for euro dollar again. So that's why, guys, for now, these are the two levels that we're going to be keeping a close eye on, and let me just quickly mark that for our future reference. So this on the upside, from the short-term perspective, this is what we're looking here for. We need to see a clear push above this 1.1024, and on the downside we need a drop below the 1.0975 zone here, and only then we will look into these slightly lower areas, but we'll start considering the downside even more if we see a drop below the 1.0924 zone. So this is probably more of an important level for us. But again, like I said, if we're trying to squeeze something out of this from the shorter term perspective, that's what probably the closest that you can get here. So in terms of, like I said, the upside, a break above the 1.1024 could in a way open the path back towards the 1.11 maybe, but then we'll still be very careful here with these higher levels. And in terms of the downside, the 1.0975, that's what we're looking for. And the last pair for this session, that's GBPUSD. So had a nice run, had a fantastic move higher here today. Almost managed to reach one of our levels here near the 1.2233, near this, which is near the 200 EMA on the 4-hour chart. Also, it almost kind of fell shy of a few pips of reaching this downside resistance line, taken from the high of May this year. So for now, of course, this game plan here for us still remains kind of valid. So we could see this one pushing a little bit higher, maybe testing this 1.2233 zone, or testing this downside line. If this downside line continues to, let's say, maintain the rate below it, then we could see another leg of selling and potentially falling, and we could see potentially falling GBP falling towards the 1.2137 or even below that again. So for us, the more important level will be around the 1.2106. A drop below this could in a way lead the pair back down here towards these recent lows. So initially we will aim for that psychological 120 zone, but again, to be honest, these two levels here, the 1.1990 and the 1.1950, are quite attractive as well. But as I said, we will consider those if we see a drop below the 1.2106 zone. So for now, what we're going to look at here is, yes, we will consider a possible move higher again a little bit, maybe a test of this downside line. If it holds, then we could see another move lower here, but we will be very careful. We'll probably drag this one up until the 121.37, something like that. We'll take it from there, see how it performs around here. But if it starts sliding further down and drops below the 1.2106 again, this is where it could become a little bit more exciting for the bears, and we could see this one sliding to the downside. In terms of the upside, well, as you probably can understand, we need to see this nice good clear break of the downside line, and to be honest, ideally we would like to wait for a push above the 1.2310 and only then target higher areas. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Trader's Espresso, and that's 6 o'clock GMT. For now, I hope you have a beautiful evening, and I'll see you tomorrow. Thank you very much, and bye-bye.